Welcome to ForexTV.com. It's Tuesday, December 11th. I'm Remy Hoki with the Breaking News Report. The Federal Reserve's Monetary Policy Committee cut interest rates by a quarter point to 4.25%. The Fed also lowered its by a quarter point to 4%. In post-FOMC trade, the dollar has strengthened against the euro, now under 147, trading at 146.83. The U.S. dollar also held against the CAD and sterling. Following the rate cut, U.S. equities have tumbled, with the Dow Jones Industrial Average taking a triple-digit hit. The U.S. dollar against the yen has also dropped sharply, now at 110.87 yen. Now we're joined by Ashraf Laidi, Chief Forex Analyst at CMC Markets, with his post-FOMC commentary.
Hello. Yes, the dollar is sharply up against the main currencies except the Japanese yen. Why? Because today's decision shows that the Federal Reserve has opted for the smaller option, of cutting rates by 25 basis points in the Fed funds rate that was expected, but they only cut the discount rate by also only 25 basis points. The market, some people were hoping for 50 in both. We are seeing here a classic show of curtailing or falling risk. We have seen every major fall in the stock market. The yen goes up across the board, and the dollar goes up against everything except the yen. Why? Because the dollar is up from a yield perspective and from a risk appetite perspective. We told our clients that the dollar is going to go up from a risk perspective and a yield perspective, and that's what it did. Why? Yield perspective, because the U.S. dollar sustained a cut of only 25 basis points in its yield foundation, so that helps it. But the dollar is up because the risk appetite, because the stock market, which was falling, which was doing badly over the past few months, which only started to go up because of hopes that the Fed is going to do 50, did not give it 50. So there is risk appetite falling. The stock market is nervous. What happens in this environment? There is an unwinding of those dollar shorts that we have seen, and the dollar goes back up. So, there were some interesting things here. The last rate decision showed us that one member, Honig, wanted no rate cut. Now, Mr. Rosengren, who's a board member, he's actually wanted a rate cut of as much as 50 basis points. This shows that really the Federal Reserve is all over the place here. And but there is something interesting. The other reason the market is that they did not only get because they not get 50, they only get inflation, and the committee judges that inflation will continue to monitor inflation development carefully. Like that. But really, to tell you, Remy, this is the interesting thing, is that the dollar is not paying attention to the bearish outlook that the Federal Reserve gave in its FOMC statement, which is basically words such as increased uncertainty surrounding the outlook for economic growth, and they use the words as intensification of the housing slowdown. The dollar is not paying attention too much to that, and I think it should, because it really means that there are further rate cuts ahead. Bottom line, what does it mean? Now, the euro dollar broke below 47 and all the way to 46.78. We think that it's going to drop towards 146 and even 145.80. Sterling actually started to fall before the FOMC decision, is all the way to 203.53, and we think it's going to test again 202.80 before the end of the week, actually 202.20. Dollar yen should test 110.20, and so basically this is what you are seeing. Let's see what gold is doing. Gold is still holding above $800. We thought it was going to go down to 790, but it actually came down from 813. And this is the situation. This is consistent with our end of the year forecast. We think the euro is going to go down by as much as 142, and sterling to go down by as much as 201. One thing, the Aussie, which went all the way from 88.70, is now at 87.40, 150 pips down. Why? Because it's a high-yielding currency. And that's about it. So I wish everybody happy trading.
This has been your post-FOMC Forex commentary with Ashraf Laidi from CMC Markets. I'm Remy Hoki. Join us later this afternoon for PM Exchange right here on ForexTV.com.